Welcome to Trade Pro. In this video, I'm going to discuss how to calculate risk management and position sizing when it comes to trading Forex and cryptocurrencies. So I'm going to go through a bunch of different trade examples to show you very simply how you can calculate your position size and know how much to risk per trade. So let's get into this. All right, I'm going to start out on euro dollar doing the calculation with pips and then head over to Bitcoin and do the calculation using a percentage based method. So let's just say for an example here that you want to take a long position on euro dollar, and it's because there's a cross up on the MACD right here, there's bullish divergence. So here is where you want to buy. The first thing you need to know is how far away is your stop loss from your entry in pips. So let's just say you're going to put your stop loss below the swing low and it's 14 pips away from your entry. Next thing you need to know is what's the account size that you have, and 7,000 is what we're going to say. Then you need to say, okay, how much do I want to risk on this trade? Well, we're going to say 2% risk per trade. And another thing you can note is how big is that spread? What are the fees? Things like that. And a typical spread on euro dollar would be around 1 pip or less in most cases, depending on time of day and obviously what broker you're using. But we're just going to say 1 pip spread. And I'm going to get back to this in just a sec, but we're going to first do the calculation without incorporating that spread. So 2 methods that I recommend you use to calculate your position size in this manner. And the first one is super easy through TradingView. So if you just use this tool, set up your risk reward ratio and right click it, hit settings, you can literally just put it in right here. Account size 7,000, risk 2%, hit OK, and it's going to tell you your position size in order to risk 2% of your account size. So 100,000 units, 1 standard lot. Really as easy as that. And if you're incorporated, then that's ideal. If you use a Wanda or Forex, you should definitely be incorporated to TradingView. If you don't use TradingView, then you can use something else. So earnforex.com/position size calculator. There's a bunch of them online. Just type in position size calculator Forex or something along those lines. But anyway, you just bring those numbers over here. So account currency, USD, account size 7,000, risk ratio percentage 2% risk, and then you put in how far away your stop loss is in pips, your currency pair, and hit calculate, and it's going to give you all the figures that you need to know. So 140 down here, that is what you're actually risking out of your $7,000 account size, because 140 is 2% of 7,000. And then 100,000 units, 1 standard lot. All right. So those are the methods you can use to calculate it with pips. And if you want to account for the spread, which I think is important, 1 pip spread, that is the fee. That's what a spread is. It's a fee. So it's kind of a sneaky way to do a fee, and it's annoying because it changes all the time and can be really high, but it can also be really low. So yeah, depending what you're trading. But anyway, let's talk about what actually happens when you have a spread. Well, you're going to get a worse entry right off the bat. So instead of having a 14 pip stop loss, if this was your setup, it's going to look like this. You're actually going to have a 15 pip stop loss. So automatically you're going to need to take a smaller position size if you want to risk 2%, because now your stop loss is farther away. And also, what it messed up is your risk reward ratio. So if you want to adjust this and make it 2 times risk still, we're going to have to move that. But anyway, you can see that the quantity has now changed. It's a smaller position size. So everything stayed the same in here. $7,000 account size, 2% risk. And the quantity is now 93,333 units. So yeah, smaller position size is needed if you're going to have a farther away stop loss due to a spread. Okay. So definitely recommend calculating that in, so you're not risking more than you think you are. So over here, all you have to do is change, boom, and then it's going to give you your smaller position size. Okay. Still risking 2% now, just with a smaller position size. So it's as easy as that. Really easy when you use these calculators. So I recommend you use one of those 2. Now let's head over to Bitcoin. And I've kind of drawn out the calculations here on the screen, but I'm going to go through it in detail, so don't worry. So first things first, where do we want to enter? Well, let's see, we got the bearish divergence crossed down on the MACD right here. And so here's our entry. And again, first thing we need to know is how far away is our stop loss, this time in a percent. So if it's just above the swing high, we're looking at 1.16% away from our entry. Next thing we're going to take a look at is what's our account size? Well, it's 7,000. What's our risk? 2% per trade, same deal. Now to calculate our position size, we need to take that 2% and we're going to bring that 2 over here and divide it by this risk percentage where our stop loss is. So our stop loss is 1.16% away from our entry. So 2 divided by 1.16, which equals 1.724. We take this figure, multiply it by our account size. So this is going to give us our position size. So 1.724 times 7,000 is 12,068. That's our position size if we want to risk 2% of our account on this trade, not including a fee. Okay, so once again, if you want to calculate how much the fee is going to be, you need to do a little bit of simple math. And let's just assume that your fee is 0.07% of your position size. And that is the same thing as 0.0007. So you can just multiply 0.0007 by the position size. So $12,068 times 0.0007 equals $8.45. So that's your fee. You're paying $8.45 to take this position, meaning instead of only risking $140, you would actually be risking $148. That's how much you would lose if your stop loss got hit here, because you got to pay the fee. You're also going to make $8.45 less if your profit target gets hit. Okay? So it can be quite significant, especially if you're using a lot of leverage. So if you had a $3,000 account size and you had a $30,000 position, you're still paying the fee on that entire position size. So just keep that in mind, that when you're using high leverage, especially in Forex where price doesn't move very much, you kind of need high leverage. You're going to be paying the cost of those fees, and they really add up. So that's why I'm a little bit kind of worried about some of the people I see commenting on my latest video saying that it's not actually the best strategy, because I've shown strategies on the 1 minute chart where they get a ton of signals every day, but those people aren't taking into account how you're going to get destroyed by fees and spreads if you're trading on a 1 minute time frame. It doesn't matter if you get 100 signals per day. Imagine how much all those fees are going to cost each day. You're going to be paying thousands of dollars in fees each day, which is going to be absolutely destroying your account. So personally, not quantity over quality. Quality over quantity is what I told those people who were saying that they wanted quantity over quality. Definitely not the case. You want to survive the fees, not get eaten alive by the fees. But anyway, I digress. That is how I calculate position sizing in a very simple video. Hopefully it wasn't too long. I think 5 minutes or so. Oh no, maybe longer. Well, anyway, I'm about to see when I end the video. Have a nice day, guys. Thanks for watching. Shout out to the Patreon member who requested this. Sorry it took me a while to get to. Have a good night, everyone. Thank you.